We've told you before in this program that Philadelphia has trailed the brisk pace of recovery in some of the other mid-Atlantic and Northeast markets, but that is beginning to change. Big quarter for Philly. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Philadelphia update. Let's start off by rewinding the clock all the way back to 2010. Take a look at this chart showing annual revenue change in 2010 between Philadelphia, DC, Baltimore, and New York. And you see that at that point, Philly was way behind the pack. 10% revenue growth in New York, 6 to 7% in DC and Baltimore, but only 3.3% revenue growth in Philadelphia. And again, revenue change is the combination of change between same-store rents and occupancy. But this story is beginning to change. Take a look at the chart now showing revenue change in 2011's first half. And now you see that Philly is right in the middle of the pack. New York again leads at 5%, and then Baltimore and Philly are right there close to 4%, and DC is actually the laggard now, 2.8%. How did that happen? Well, first of all, we did see the pace of growth in some of these other markets, especially DC, drop off. We talked about DC in another video recently when we talked about disappointment so far in 2011. But let's give Philly some credit as well. Philly is starting to see revenue growth kick into gear as apartment operators and owners have gotten more aggressive in raising rental rates. Take a look at this chart showing quarterly same-store rent change by quarter, and you see that Philly recorded cuts in the second half of 2010. But now, for the first time in quite a while, the Metro has posted back-to-back quarters of strong quarterly rent growth, 1.6% in both 1Q and 2Q of 2011. And when we combine that 1.6% jump in rents in 2Q with an occupancy improvement of 1.1 points, which is actually a good jump for a Metro this large, we get quarterly revenue growth of 2.7%. And that makes 2Q Philly's best quarter in quite some time, definitely going back to prior to the recession. Now let's take a quick look at occupancy overall in Philadelphia, and then we'll come back to the story of growth in the first half of 2011. And you see that with the big jump in 2Q, that actually just made up for some backtracking in the previous 6 months, so the overall rate of 94.9% matches the level seen 1 year ago. So what's driving the revenue growth in Philadelphia in the first half of 2011? Well, what had been the problem in Philadelphia, what was weighing the market down, was some weak performances in the suburban areas. But that has really changed. We're now starting to see some solid growth in suburban submarkets. Take a look at this chart, this graphic showing revenue change in the first half of 2011 by submarket. And here are our leaders. Number one, 7.5% revenue growth is Norristown, Upper Marion, Lower Marion at 6%, Burlington County, and then Northwest Philadelphia, Lower Camden County, Central Wilmington, and Delaware County, 5% or more revenue growth in the first half of 2011. Overall, I do want to point out that occupancy rates do remain weaker in these suburban submarkets, and by far the healthiest submarket in Philadelphia remains the downtown Philly submarket, where occupancy is very tight, 97.7%, and annual same-store rent growth was 4.1%, and that was one of the best year-over-year performances in the Metro. But it's certainly encouraging to see this big comeback in some of those suburban markets. And going forward, we expect to see this trend continue, occupancy recovering in those suburban areas, but rent growth should be strongest in the urban core, although the overall rent growth numbers for Philadelphia certainly should continue to improve. And that wraps it up for Philly. Until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.